Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 6th of September, 2017, about 2:10 p.m. Central Daylight Time. Well, I stuck my neck out pretty big yesterday saying that I thought the markets today were going to try to get back under their upper Bollinger Bands, and lo and behold, you're down $7 in the gold, you're down in the silver, 5, you close 1791, around 1378 there. The copper is the market that's staying strong. It just refuses to back off, and the logic there is China, and China's economy keeps expanding surprisingly well, and that's got the demand for that market. It's not the dollar today, which is up 5 points, or the euro, which is down 11. Remember, we get the European Central Bank announcement tomorrow. What kicked the stock market up, I think, today was the president bucked his own party and decided to give a 90-day extension on the debt ceiling. Mr. Mnuchin did not want that. I mean, he was gone on record. And at the same time, he got his relief for Hurricane Harvey of $8 billion. So one way or the other, where you can count on this president to say one thing, do another, he basically got a lot, I guess, for the people in need, and now they can argue for 90 days what to do with his budget and other items. He certainly gave away some bargaining power in the process. The market liked it, that at least Congress got something positive done, and that's been the rally. Now, in the gold market, maybe it didn't like that. On the weekly chart, you're still up $7. Remember, this is still the impact of the weekend event of North Korea. But what's happening in North Korea is pretty evident. Where are you going with it? Russia keeps saying they're not going to go for more sanctions. They think they don't work. So it's going to be the U.S. basically using its banking system to attack companies that do anything in North Korea or some other event. War, I'm going to repeat what I've said all the way through. I don't believe that that's going to be the solution or an event. When you go to the December gold and you look at the charts, you've gone from 1291 up to 1344.5 and down today. By the way, you might want to read the paper about a company called Monex. They advertise, they've been around forever, but there's some news that broke on them today that is very, very upsetting, and we'll see what happens there. But if you're an investor through them, do pay attention. I don't want to be the one to say what the news is because I don't want to say it wrong. Go on the internet. In looking at the market, you're backing off a bit from that peak. You can see how the market's got what we're going to call an inside day. That means it did not take out yesterday's highs or lows. It's a pause in this rally. When we take a look at the swing line, which is this study that's the dark lines, you have the pattern of higher lows. I think you'll agree with that. You certainly got the higher highs. The definition of an uptrend is a pattern of higher highs, higher lows. You would have to take out 1302.30 under the current formation to break that uptrend. I then apply on charts moving averages because so many traders like them. And I view the 18-day moving average of closes, the red line, is what I call the line in the sand. When the market is over it, I say it has an upside bias. When under it, a downside bias. In addition, it plays a role that if the market were to break often, it becomes a support zone if the market's been above it. And if the market's been below it, let's see if we can find an area here. It comes up and sometimes, yeah, it did here, 2 days in a row. Fights a battle against that number. Okay, does it always work that way? Nah, nothing's always. But what a chart's about are the probabilities, things that happen more times than not, and how good that probability may or may not be. So I combine that and I say that, listen, if the market were to break, what breaks the trend is getting under 1302.30. I would expect to see buyers potentially here against the 18-day average, which is currently 1304.80. But remember, when the market reopens tonight, after the close today, wherever that's at, we already know it's going to close around 1339. This number is going to climb to whatever that new opening is, and we're going to drop one day back here. That's the 18th day. So that's why it's called a moving average. It will move higher. I pointed out to you that you had been over the upper Bollinger Band. If we come back here, you closed over it yesterday, and the day before you closed over it. That was 2 days in a row. 5% of the time, a market trades above or below a Bollinger Band, only 5%. I have my own technique with that, and I say that when it does it, I like to subtract one of those percentage points from that 5. And if you get 2 days in a row, subtract 2 of those points. It's a rule of thumb. It's not hard and fast, and yes, I've seen enough 7 times to make me understand that you can get beyond that 5, and then I immediately go to 7. But it doesn't matter from my way of thinking, because the one thing, if you think about it, if you're in an upper Bollinger Band and you're over the 18-day average to do it, you never have a downside bias. Never. You always have an upside bias. So it's one thing if you're looking to come out of a market on a long position. It's a whole different thing that I don't teach, to go short against a Bollinger Band. When I look at the slow stochastics, today was good news for the gold. You heard me, good news. You have an embedded reading. You've got now 3 days in a row where both the K and the D line are both over 80. 3 days in a row, Friday, Tuesday, and today. That's enough. So until the red line closes back under 80, I am in the bull camp. I have the bias up, I have the trend up, and I have the embedded reading. If the red line closes under 20, the odds will favor price will make a run for the 18-day average, okay? It would then also say you've lost that upside momentum, but it does not mean the market turned bearish. Why? Because you could do that and still have higher highs, higher lows, and be over the 18-day average. Just the momentum was broken. In the gold ETF, I wish I could say I'm surprised. Here too, you're backing off and underneath the upper Bollinger Band with an embedded reading. It's the same as the futures there. Still a bullish condition. Could pull back here, and on so I would expect to see buyers step to the market because things are looking actually still pretty bullish. What about GDX? Same thing. You're over the upper Bollinger Band, finally pulled back with an embedded reading. That's all that it is, folks. It's not a change of trend. It's a correction that is set in. The gold-silver ratio is in a down thrust. It still favors that silver is stronger than gold. You needed 76.17 ounces at this peak right here in early August to get 1 ounce of gold. Now you need 74.68. You need less silver to get that same ounce of gold. And in the silver market, the upper Bollinger Band, if we take a look, you closed over it yesterday. The day before you closed over it as well. So you had 2 days in a row over it. I last night said on these tapes that I thought the odds were now about 3% of the market staying over that number. It closed under it today. And therefore, what you've still got here is an embedded reading, higher lows, higher highs. The pullbacks in this market look as though they're going to be interesting to the bulls. In the copper market, you've had this embedded reading for days. The market doesn't get under, it doesn't break enough to offer an interest to the chart to a lot of people. That doesn't mean it's not going higher. This is a market that's on a tear to the upside, and until it's over, I'm going to make the most obvious statement. It ain't over. And I'll have an idea that it's over when the embedded reading, this red number, closes under 80. Until then, I say this market is still very friendly. Platinum market is a market that's overbought, not embedded. It's got higher lows, higher highs. It is fighting at the upper Bollinger Band, able to not stay over it. In the palladium market, I think we'll hit this 18-day average in short order, only because the odds favor that when you lose that embedded reading, just like here, this is where you lost it. You lost it up there. To me, that's not a correction anymore. That's a sign the market's going to make a run for the 18-day average unless the very next day you were to get a big rally and re-embed. You didn't even try to do that. Look at the high. You never even made an attempt. So now the market's in that corrective mode. That's what I think is going on there. In the dollar index, you're bouncing off the lower Bollinger Band. The trend of the market is down, lower highs, lower lows. Momentum is still pointing down. There is nothing that I see on this chart that is bullish. So I look at these markets, try to figure out where to go with them. And with the European Central Bank meeting tomorrow, probably want to see what happens, the reaction to that. You know, today there was a surprise. You think that all these bank meetings are the way the analysts say. If you look at the Canadian dollar, I don't have it up here, unfortunately. I have it on some of the others. It was up over a full cent today as the Bank of Canada surprised the market and again raised interest rates by a quarter point. I don't know of any analysts that were calling for that, and that really caught the market by surprise. What's the euro going to do tomorrow? Don't know. But I'll cover it in my market research. At 8:30 in the morning Central Time, I sit down, I don't pick up phones, and I do one thing. I record 40 charts on my computer screen. I have a headset, everything ready to go, and I'm talking over them, giving you trading ideas if you get my market research. I talk window envelopes, a subject you don't even see here. I'll talk inside, outside days in a way you may not be ready for. It's a lot of stuff that I do in my charting course, obviously, because the whole purpose of that is to reinforce what my students have seen and what my subscribers have seen. If you'd like to try a 20-day trial, assuming you haven't tried it before, call us at 866-973-2077. You can also go to our website at www.iraepstein.com. You can click up here if you're watching me on YouTube, this icon, or underneath us on many websites. It says, click here for Ira's free information. Do so, and away we'll go. I'm Ira. You have a great day, and I'll see you later today in our financial market wrap-up.